Guys,
Yeah.
I don't think Michael's able to hear me.
No, I could hear you.
Oh, okay. Yeah. Sorry, I thought like there was a bit of an overlap. But yeah, if you guys are listening to us from YouTube, go ahead and leave some feedback and turn on bell notifications so you can be aware whenever these streams go live. And I'm also joined by Naka and Feel Pain. And yeah, we're just here to talk crypto and overall market discussion. Michael's been in the investing game for close to 20 years now. And Damiano also has a plethora of experience. Damiano, I don't think me and you have had the chance to formally introduce one another. So, on behalf of Because Bitcoin, my name's Wabi, and I've been in crypto for about 5 years now. Got in literally like near the top at 20K. And, 2018 was a really humble and learning experience. But through that, I got into several projects relatively early, like Cosmos and Phantom. And 2019 is where I really figured out, like, what Ethereum is going to do for the next cycle. Got into some early stage stuff like synthetics and Maker, and used Uniswap well before the token went live. And my first experience, like, using quote unquote first for new users. So I have zero equity market experience. I've never traded a stock in my entire life. Never signed up for a brokerage account, and didn't really pay attention to macro in general until I came across Michael last December, when BTC absolutely shat the bed from 58K to 40K. And I kid you not, Michael can attest to this. We saw Chainlink on KuCoin completely get annihilated to almost zero. It went from $25 to, what was it, Mike? $5. We saw
Link went down to like 550 that day. That was pretty funny.
and Rune went
Yeah.
from, I believe, $14 to a buck, to a dollar. And Luna went from $70 down to about 25. And I remember I had like 60% of my entire portfolio locked up in Anchor, and my liquidation price was about $32. And on KuCoin, it hit $25. So I literally thought that I got liquidated. And it wasn't until that day where I thought, holy shit, I need to really pay attention to what's going on. And yeah, me and Mike got into like an hour or 2 hour phone call, and ever since then I've just been paying more attention to things outside of crypto. And as far as Because Bitcoin is concerned, I've been friends with Carter for about 10 months now. I've known for quite a while. So, friend of Mike's is a friend of the show, and Mike has been on Carter's show when he was here in Twitter back over the summertime. So it's good. It's good to have you here, brother. Thank you for joining us. And yeah, man, feel free to introduce yourself, brother.
Damiano, are you there?
I'm here, bro. I thought he was
Cool. I
talking to
think
you.
Wabi wants you to introduce yourself.
Oh, my bad. Because he ended off with Michael, so I thought he was talking about you. All right. So for those who don't know me, my name's Damiano. I've been trading equities since 2013, options since 2016, and I've been dabbling in crypto. I bought my first Litecoin, which is what got me into crypto back in 2014. I actually bought pretty close to the top in Litecoin at the time. But yeah, just want to say, Wabi, thanks for having me, fam. Really appreciate it. Michael, it's been a while I've known him, also a good friend. So any friend of Michael's equally is a friend of mine.
Just so you guys know, Damiano, I consider, and I don't just pass this around lightly, I think he's one of the best forecasters out there. So if you guys don't follow him already, I would strongly suggest you give him a follow. He's one of a kind. And he is very unselfish. He shares a lot of wonderful information on his account, and I think you guys will love him. If you don't follow him already,
Thank you for that. Hard to follow. You guys are all complimenting me. I appreciate that. But yeah, I'm excited to talk a bit about equities. I'm excited to talk about crypto with a bunch of crypto experts. It's very rare I talk to actually more crypto oriented people, so I'd love to hear what everyone has to say tonight. Um, but yeah, let's get this show on the road.
Wabi, where would you like to start?
Yeah, man. So usually first, like I just give like the introduction to the show. I already did that, and then the guests just give their intro. So Mike, if you want to introduce yourself, feel free.
Yeah,
You can do like a quick TLDR, and then typically
yeah,
we just follow through with overall discussion.
absolutely. Just if you guys don't know me already, my name is Michael. I've been trading for about 20 years now. I got into stocks literally at the top of the well, not at the top, but I got in like in the 1999 bubble. I wasn't, I just got into the business. I answered an ad in the paper, and I ended up working for some shady firm, and it was really cool. And I started learning about the markets, and then I got officially licensed in 2000. And everything crashed on me for 3 years. So it was a huge learning experience, losing my clients' money, things of that nature, and actually learning how to trade and how to invest, in the type of environment that we're in now. And, I think it makes you realize that, yes, you could always have your daily scalping and, you do your little trend following and all that stuff. But the big picture is driven by the larger forces in the macro. And I think the more that you could tap into those and see trends emerging before the masses do, I think you could do, very, very well for yourself. I got into crypto. Crypto is actually the reason why I started the Twitter account, which is pretty ironic because Twitter is my absolute only social media at the moment. And right in 2017 or like early 2017, my friend told me, he started telling me about crypto. I actually knew about crypto, but I never wasted my time. I shouldn't say waste my time, but I never took the time to learn how to buy it and all that good stuff. I had my friend, I was like, yo, buy this ETH, buy this ETH. And he bought it at like $5. And I didn't buy it because I was just too busy with work and stuff. But he ended up buying it. And then he's the one who got me on crypto Twitter. And, I got into crypto, which I think the 2017 bull market was very fun, a lot different than the 220 bull market. I think it was much more pure and the yields were much better. I made about off of like I think I put in only like 5 or 6 grand, like play money, and I made like 37 times on it, which was pretty funny. I wish I put in more. But so I've been trading crypto now since 2017. And I just think, as far as everything going now, I trade full time now. I also do some other stuff on the side, to satiate my other interest. And yeah, that's about it. If you guys don't know me, give me a follow and hold it over the fire. And Wabi, I'm glad to take it where you want it right now.
For sure, man. So I guess we'll start off with Damiano. What are your thoughts on the crypto market going into 2023, given that this is the first cycle that crypto is going to experience, where equities as a whole will likely experience a 35 to 40% overall drawdown, especially with rates being locked in at 5%, at the very least until Q2 of next year. If you want to give your thoughts on that and how you think the liquidity situation is going to occur, do you simply think that like this will simply be just a regular bear market where you have 85 to 90% retracements across all majors? So say like BTC at 10K, 11K, 9K, or do you think potentially this market will go back to the old school volatility where BTC can experience a 90% decline, and how you think that correlates with the equity markets going through what they're more than likely going to go through? I think something that Macro Alf says is that the tightening that went on in 2022 will set the stage on how hard it's going to be for the overall markets in 2023, kind of like for that final that final blow to certain evaluations across tech?
Yeah, so I guess I'll start with where I think the equities are going, and then I'll get into how I think crypto relates. But so far, with crypto, to speak quickly on it, is we're following pretty much the same 4 year bull cycle, 2 year bear cycle max. For those who are unaware, since its inception publicly, since its first public trade in 2009, Bitcoin has a habit of topping every roughly 3.5 to 4 years and then experiencing a 1.5 to 2 year bear market. So if you look at our first top, it was in actually December of 2013. We had a 4 year bull cycle. We topped out again at the end of November in 2017, exactly 4 years later. We bottomed out 2 years later again. And then once again, 4 years after the prior market in 2021, in November, once again, we topped out. So far, there's nothing. If we drop all assumptions and the equity markets, it's still following the exact same cycle. Bitcoin, as you said, has a nasty habit of retracing between 77 and 88.6%, with the occasional 1 to 2 day break where basically you see those vicious candles, and then it's immediately bottomed by the next day, and then we sort of just chop until the time cycle ends. So, with that in mind, I don't personally see any extraordinary volatility. Like I don't see any depression coming, not yet. I'll get into a little about that a little later. But for now, what I do see is we're following pretty much the exact same pattern. I do expect us to follow that same habit of, rising a little more into January and then finding a bottom between February and March, which is the usual cycle, with some more chop, another rally, and then one more quick bottom retest before soaring into what I think will be another but shorter cycle. So I do see that volatility you're talking about, that like super volatility. I actually see that only really coming on the downside again in the 2025 to 2026 cycle. So this time, what I have is us actually breaking the 4 year, 2 year cycle, having a vicious bull market rally toward the latter half of next year, going all the way into 2025, and then topping out and having a massive retracement into 2026, where I fully expect more than a 90% retracement and correction.
Yeah, I definitely agree with you on the 2026 part. Some speculation that I've been sharing amongst the inner circle is that the next crypto market top will likely be marked by two events. One of them is being Jerome Powell finishing his term in Q2 of 2026. I believe it's in May, and if you guys know, May is typically a horrible month across all markets. So wouldn't it be funny? Wouldn't it be funny if the market, as we know it, right, as far as crypto is concerned, right, from 2017 all the way to 2026? Because I truly believe that with the Ethereum project getting onboarded into this market back in 2015, I definitely think that the dynamics got changed moving forward. And I truly think that the price action from the earlier days will come back when an extreme event like that happens. Um, and also an NFT movie being listed on AMC theaters, right? So similar to how the 2021 top was marked by SNL, Elon Musk. The top was broadcasted across all TV screens. I think the next top will be across all movie screens worldwide, right? Wouldn't that be funny? I know we did have that second top in November, and that was kind of like, the FTX arena and the crypto.com arena. Um, so that top was broadcasted via sports games, MLB, NBA, et cetera, et cetera. So I definitely agree with you on that. What about you, Mike? How do you think we're going to enter
So
2023 in?
Yeah.
So I'm not going to sit here and say that I have an idea of exactly when we're going to bottom. I do not. I do believe I'm sticking to my story that I've had for the last 6 months or so, that the bottom is most likely going to come in potentially the late first quarter or second quarter of this year. At worst case, potentially, this is potentially into the election cycle that will start in the latter half of 23, going into January of 25. There's a lot of factors that have to be considered before we can make talks of what month the market may bottom and all that stuff. I mean, the way I look at it is this, I look at the market as sort of like a person, and that has a personality. And right now the market's depressed. The crypto market, the stock market, it's depressed. It has no animal spirits. It's pretty much dead. And until you see that appetite for risk to come back, and you will notice that in the price action, that's when we can talk about, when we might start a new uptrend and all things of that nature. When we see some type of narratives creep under the surface that will actually give us some type of driving direction, then we could talk about bottoms. As for now, everything as far as cycles obviously have some merit to them. But, I'm waiting more for the personality of the market to change. But what I will say is this. As far as crypto goes, I think I don't know the exact timing for these themes, but I believe they're going to be major themes in the next 1 to 3 years. Number one, I think the political aspect is going to play a huge part. I think crypto, which originally started as something that was supposed to be to give you freedom from the government, has now kind of the top players have kind of merged with the government. And I think what we're going to see is potentially, not 100%, I believe we're potentially going to see a war, and not only just in the crypto market, but in the outer macro world itself, war of centralization versus decentralization. I've been on that theme for a while, and I believe that's definitely going to take place. Now, as far as crypto, macro, big picture, 2, 3, 4, 5, 10 years down the line, I really don't have any doubt that crypto is going to be the infrastructure for the new economy. I do believe everything eventually is going to move to blockchain, and everything is going to be digital, and crypto is going to be the foundation of that. The only question is it something that is hand in hand with the government? It is something that tries to give us freedom from the government. That is the war that's going to be fought. But when we do, as far as crypto big picture, I don't think it's going anywhere. I just think it's a question of, we have to wipe out all the fraud right now. We have to see, there's going to be some type of regulation that comes into play. And then once these things fall into play, then we can see kind of which direction it's going to go into. But as far as the actual technology and the sector itself, I don't believe it's going anywhere. And when we do finally come out of this malaise, I believe that the companies that establish themselves as the Facebooks, as the Googles, and, the companies that came out of, for example, the 2000 bust and came on to be the Amazons and Googles of today, I believe we're going to have that same opportunity in crypto. I don't think we're there yet, but I have no doubt that I feel very strongly that blockchain technology is going to be a big part of the economy. So I do believe if you hitch your rope to the right wagon, there's a ton of money to be made. I just think there's a lot of murkiness in regards to regulation, and in regards to the original direction crypto was supposed to take us, which was supposed to be freedom from the government. I believe now it's going to move more towards centralization and more control. And I think that at some point, some type of privacy movement is going to start. So that's where I see the macro picture. As far as when do I actually think we're bottom? We need to see more. Like I said, we need to see risk appetite to come back into the market. People willing to risk money, feel comfortable doing that, and actually have money flowing back into the economy, which we're not going to have for a little bit. So it's hard for me to sit here and say exactly when I think we're going to have a rip-roaring bull market. But I do think once we see those ingredients happen, we'll obviously know, because as of right now, the Fed pulled about $350 billion last year, and they're looking to step that up next year. So they took up $350 billion off their balance sheet. They're looking to step that up a level next year. And in my speculation, I believe at some point it's going to hit the market hard and they're going to pull back. Whether that happens in 23 or 24 is the question. But long term, like I said, I think that crypto is the foundation to the new digital economy that we're headed into.
Yeah, I definitely agree with you on like the whole centralization part. I think with Circle's USDC, in my personal opinion, I truly think that that's a prototype of a CBDC, and I know there are some projects that are being developed right now to facilitate quote unquote regulated DeFi with projects such as Quant. I know some of us are big fans of Quant, but that's a discussion for another time. But Damiano, what are your thoughts on like crypto regulation and things of that nature, given that there are some developments in the space that will cater to quote unquote institutional market makers, such as I know Citadel is going to partake in the next cycle for sure. And I think personally, I think that Circle's USDC is going to be a backdoor for that. So once we see the USDC money printer turn on and not so much the Tether printer turn on, I think that'll be an indicator of, all right, the big boys are coming in. Because it doesn't really matter, in my opinion, if like, oh, QE is back, right? And they're purchasing bonds and they're purchasing like MBSs and all that stuff. That doesn't matter if I don't see the USDC money printer turn on, or even the Tether printer, but more so the USDC printer. I think that's like our version. As far as crypto is concerned, I think that's our version of anything that's indicative of new money coming in, specifically big money, because those two parties aren't indicative of, oh man, retail's coming in. It's more so USDC and Tether.
The first thing I'll say is I agree with Michael here. I really see almost a Brave New World style divide in crypto that will appear at some sort. And what I mean by that is there will be the centralized powers that have come in and sort of swept up the remains of these these FTXs, and we know that a lot of old money, I'll call it tradfi money for the crypto people, who have been investing in crypto and sort of sneakily inserting themselves behind many of the top market cap projects as far back as like 2016 to 2017, and probably even before that if you were to dig deeper. And I do see that, as Michael said, there will be a merger of sorts at some point in the next 3 to 5 years. That's my timeline. Of course, it could take longer, but that's what I'm looking for. And the other splinter faction would really be the the decentralized people, the people who sort of refuse to surrender the idea of crypto to a larger centralized power, the people who will make their own exchanges, who will wrap certain tokens and add privacy layers and things like that, and take it really a step deeper. So like I know one project I love for this reason, I'm not going to shill it, it's just that I love the ideology, is Pirate Chain, only because the community really loves the decentralization aspect. Everybody's sort of, the running joke is that everybody is the CEO of Pirate Chain. So, as long as there's even one person left holding, there's one person left who will be building and creating a new infrastructure. And I think that sort of embodies the true decentralized crypto people who love what crypto is. They love the idea of what Bitcoin was supposed to be, and that was an alternative store of value, a new monetary system free from centralized powers and any one influence, something truly that is a people's coin of sorts. And so I see in the future a grand divide between the people trying to escape the centralization of crypto and the people who are all for it, because the sad truth is a lot of people who were hurt by all of these frauds and scams will gladly welcome regulation, because in their mind it will improve the infrastructure. It's an improvement to what they think. And as things get more stable, it's not true stability, but as they appear to get more stable, they will welcome a certain privacy and decentralized trade-offs in favor of security. And we're already seeing that with all of the rise of these new exchanges that are sort of not trying to be too decentralized, but they're also not pushing centralization either. We're seeing a lot of hybrid infrastructure emerge, and I do think that we'll see the evolution of this hybrid infrastructure as well. In terms of what you were saying about the money, I do actually think that at some point next year, the Fed will reverse from tightening, as they will over tighten, and this will fuel this will help fuel the mini bull market that we're talking about. I do agree with you that it's not too relevant in terms of crypto, but since crypto still does follow the equity markets as much as many people would like to say it doesn't, until that cycle breaks, it will continue likely. So I do see a reversal happening in the next year on the equity and the Fed side, and I do think that also aligns with the next halving cycles and bottoming right before those halving cycles occur.
Hey guys, I want to give a clear transparency report on my part. My knowledge on macroeconomics, for all the people listening, my knowledge on macroeconomics is at a really base and ground level. I am no expert. I do not trade the equity markets. I'm only informed on basic ground level stuff. Um, Macro talk and all that stuff. I think Carter is a better suitor for that when he does market talk. I'm simply here to facilitate discussion between people that are involved in crypto and also in equity markets. Just want to point that out again. And if you guys enjoy discussions like this, feel free to follow the Because Bitcoin page, because I do not do any crypto specific spaces on my page. They're all facilitated through the Because Bitcoin page. And for the new listeners, I see now we have a little over 100 listeners. For those that just came in, we're here joined by special guest speakers, Michael and Damiano, who have a plethora of experience in both the equity and crypto markets. And we're discussing everything in between. Now that we've reached sort of like close to the halfway point in the discussion. So, Damiano, before we pass it on to Mike, given that you've been in the crypto market since 2013, 2014, I'm a real big historian, right? I've done honestly more due diligence than the average person should do. I've done research across every single market cycle in crypto and how every bottom is formed and the narratives that usually prop us out of that bottom. So in 2015, right, the narrative was alternative payment options. Right, we had things like Litecoin, we had things like Dash, we had things like Monero, we had things like XRP, which absolutely ripped, and I mean ripped, during Q2, Q3 of 2015, right? And then, you can say, oh, it's alternative payment options, and also the inclusion of privacy, right? With which is Monero, right? And all of those tokens that I just mentioned bottomed out right around the time BTC did in early 2015, late 2014, right? And then in 2019, right, the narrative was, wow, all these dApps that are being built on Ethereum are coming out, right? You had like the Uniswap grant, right? So it's like, wow, atomic swaps on ETH. And back then, I believe one of the first quote unquote layer one blockchains to have DeFi were things like Tron and things like Neo. Like, I remember in 2018 where like you were able to use Switcheo. That shit was absolutely awful. So a lot of these startups were just buying loads of Ethereum and loads of Chainlink. And I believe Oracle's on Link were starting to go live. So quote unquote DeFi, decentralized finance, and the things to facilitate that ecosystem were starting to come to fruition, right? So you had things like synthetics, you had things like Maker, and you know people don't really want to recognize this, but things like Anchor Protocol weren't the first protocols where you were able to earn yield on your stables. It was actually Maker DAO. Right around Q3 2019, you were able to earn double digit percentage points on your DAI, and that was absolutely unheard of, right? So you had that narrative, but you also, for the first time ever, you had a big tech giant, Facebook, come into the frame and say, hey, we want to build a stable coin, Facebook's Libra. And I'm starting to see something sort of similar to it, but it doesn't regard stable coins. It's more along the lines of what Twitter's trying to do, right? and they're being integrated with the Mask network. And I believe some profiles are able to use the Mask network, and like you'll be able to send like BTC and Ethereum to other Twitter users. I'll post a screenshot up on the Nest. But something also that's pretty cool for those of you that have updated your Twitter app over the last week or two is that when you put a cash tag, BTC or ETH, on the search bar on Twitter, you'll actually see a chart, right? So for me, that's telling me that, like, Twitter wants to incorporate some sorts of exchange, right? Some sort of Cash App, Venmo sort of thing, or what some people are calling. I don't want to be cringe when I say this. I really don't. So if your ears bleed, I'm sorry. Um, Web3, right? So I'm so sorry, guys. I know that term is kind of cringe, but Twitter is becoming sort of like the killer app that quote unquote crypto wants to do, right? You have a messaging app. You have essentially Telegram, but on steroids. You're able to get into a phone call with thousands of people across the world, and soon you'll be able to send money, right? And eventually you'll be able to do like super chats. So if you do a space and you see people in the audience, and like say you're listening to someone that's putting out good content, and you're like, yo, I want to ask a question, and I want it answered now, right? So essentially you send like $1, $2, $5, $10, however amount you want, and your question or statement will be posted to the screen or the Nest. And that's super chat. So those sort of options. So potentially for myself, I think that's going to be the narrative for the quote unquote echo bubble in 2023. I just think that it's going to align when, the Fed is well underway to cutting rates, because from what history has shown us is that after the first rate cut, or when the Fed quote unquote pivots, that's when the final capitulation starts to get loaded, right? Like we saw recently in late 2018.
Yeah, I mean, if you look at the, are you, okay, there you go. Sorry about that. I think the problem with the Fed, in my eyes, is why we're not going to see rate cuts anytime soon. I mean, allegedly, we just grew about 3% on the GDP, which is probably complete BS, but I have no proof of that, other than, maybe looking around and evaluating the environment. So the way I see it is I could see the Fed raising well into next year, especially if inflation picks up again. I think people are really underestimating that the Fed is not going to cut rates until there is some type of crisis. That is when they're going to either that or deflation really comes into play. Now, in either scenario there, you have a market that's going to go down substantially. So, like I was saying the other day, last week, the best case scenario in Jerome Powell's view, maybe, perhaps, I'm just guessing here, is that the market kind of ranges between, the bottom it's in right now and 4K. Maybe it makes a little bit of a slightly lower low and goes back up again. That gives him the best environment for him to continue his steady rate hikes and to try to beat inflation. So the only way you're going to see a pivot from the Fed, in my opinion, is if the market completely falls out of bed and we're sub 3K in the S&P. And until that's assuming that inflation, and at that point, inflation numbers probably will be down because of the macro environment itself. But if people are expecting the Fed to pivot anytime, like in the next 3 to 6 months, I don't think it's happening. I think that's something that's going to happen towards the end of next year. And unless we get some type of cascading event in the market where we fall 20, 30%. So if we're talking about like you said, when the Fed pivots, it's probably potentially when we're going to see the worst price moves in the market. So in regards to what you're just saying right now, I don't know if that's the direction we were trying to go in, but I just wanted to pop in and say that.
It's fine, man. I usually go on these like long-winded rants. Um, but I know that you like to trade on narratives, Michael. So as far as like, next year goes, crypto usually has like a mini cycle before the longer macro bull cycle. So like, what do you think a narrative is going to be to trade on after we bottom, given that
Well, I
like
can't, I can't guess. I really can't guess narratives until they develop. But the first thing I'm looking for, number one, I want to see the price action, how the price action is into January. I think that will give us a slight clue potentially to where we're going next year. But most importantly, I mean, you have to look at it this way. Right now, in the macro environment, money is being pulled out of the economy, not being put in. High risk is being avoided. I think I read a stat where about there was a decrease of about 8% in junk bonds, high rate junk bonds. So, there's a lot of companies out there that were just getting by on their vision and their charismatic CEO. That is no longer going to be the case as long as the Fed keeps pulling out money into the system. How does this relate to crypto? Crypto is, for the most part, driven by speculation. We're not at the point yet in crypto where we could say it actually drives, economic activity and things of that nature. We're going to get to that point, and I think we're going to get to that point, as we get to the latter half of the decade. I think you'll see crypto becoming more of an infrastructure type of thing rather than a speculation vehicle, and rather than just, moving money around into different wallets. I do believe, maybe a little bit after 2025, the second half of the decade, we're actually going to start seeing crypto being used as an actual infrastructure. So I think that's when we could really start trading on narratives. And, so that might be a little while away. But, as far as price action goes, I think that's the most important thing to pay attention to. And like I said, if you look at the price action now, it's very depressed. There's no excitement. There's very little movement. There's very little volume. You have to ask yourself what's going to make, if you are a big investor sitting on a few $100 million, $1 billion, what would make you want to put your money back into the market? That's what you have to ask yourself. And I don't know what that is yet. I do think as we move into the decade, those things will develop. I think the metaverse is, even though it's a big flop right now, I think that has the potential to be huge. What you were mentioning about Twitter potentially putting in a payment system, paying creators on their site, people who produce, for example, they could take over what Gumroad is doing and make it go right through Twitter and have a payment option right there. So there's lots of different ways that crypto could create a narrative. I just don't see it yet. Anything can happen at any time. Bitcoin could decide to take off for no reason tomorrow and go to 30K and everybody will be bullish. So, some things just happen like that. But as far as like the big macro trends, I believe we're a little bit away from really having something to hang our hat on. And I think that, but I do believe we're getting closer and closer to that. I still think there has to be a lot more cleansing in the sector, getting a lot of the fraudulent players out of there. Hopefully Sam was the last and biggest, but we don't know that for sure. And I think once that gets away, and then, you get an idea of what the regulators are trying to do, then you start seeing some big money move into the space. I think that's when you'll be able to have some long-term moves you feel good about.
Mike, I'm not sure if you saw it, but there was another guy who was arrested. His name is gosh, these guys always
I saw that. I did see that.
They have the craziest names, dude. They always have the craziest names. Sam Bankman-Fried, Nuke Goldstein, Abraham Eisenberg. Like, dude,
What is wrong with these guys?
So for those of you who don't know, like Abraham was essentially a shark. He was a shark. Like he would exploit DeFi protocols, and he would be like, "Oh, guys, look at how my team exploits farms and DeFi protocols, things of that nature." And it's like, damn, dude, this guy is actually a straight up criminal, right? But going back to narratives, Damiano, what narrative are you looking at as far as development is concerned to prop us out of that inevitable bottom in 2023 when it comes to crypto? Like what are you looking for, like DeFi to lead the round?
Not at all. No. Okay, so two answers to that. The first is Sam Bankman-Fried is 100%. There's no potentially of this. I know for a fact he is not the last one. Right now, the narrative that will help us bottom more than anything is, as paradoxical as this may sound, it is mass adoption and regulation will be at the forefront of propelling it. And the reason for that is there's two things going on right now with all of this Sam Bankman-Fried, the FTXs, the Celsiuses, the Voyagers, all these things. It's purposely done, and something I mentioned before about our big institutions backdooring these projects. The reason for this partially is to install middlemen, right? And so the one way to control the narrative and to push everybody towards decentralization is right now you have people starting to almost beg for regulation, and this is because of crypto's nature of being like I'll for lack of a better word, I'll use the word ghost, but it's if an exchange goes bust, it's sorry, it's not a shareholder, it's not a corporation, it's nothing that's publicly backed right now. So there is no recourse, and so people would rather lose all their money in a tradfi market. I mean, the people who didn't are now wanting this, and so the narrative I see being formed, first of all, is they're purposely crashing all these things. They're eliminating the middlemen, and second, they are pushing for an environment where people want to see security, but not security in the way that the original crypto security was meant to be. They want security in terms of they want their own monetary security, right? They want a reassurance if something goes bust. They want someone to quote unquote cover the losses the way you would if a shareholder was. You can't really you can do a class action against things like FTX, but it's a waste of time. Versus there's been many successful class actions against companies that trade on exchanges and public institutions that have gone bust. There's something tangible that you can receive. There's a sort of backdoor feeling of like safety where like I can do something about this, and I don't think we have that yet in crypto. And so the main narrative I see is really just busting as many super exchanges, the biggest players, because the fact is as sad as it is, many of these exchanges are leveraged into each other and they are over leveraged into each other. And so when one goes bust, it's sort of like a domino effect. Well, if you have millions or billions of reserved in another exchange, and now that exchange is going bust, the house of cards begins to accelerate and fall faster each and every time. And so that's really what we're seeing now. I'd actually argue that we're still towards the beginning of this house of cards falling, more so than we are closer to the end. And so that's really the narrative I'm looking for is agreeing with Michael here. Much more destruction is needed, and it has to be, we need something rapid and vicious. I'd like to see at least one equivalent of a limit down in the crypto market before equivalent of limit down in the crypto market. For those who don't know, limit down in the stock market, the reference is for triggering a circuit breaker when an index or when the S&P index falls too much. I believe it's 5, if not 7%. I don't know what they updated it to recently, but if you hit a certain percentage going down, it actually halts trading, and this is to one prevent too much volatility, and it's like a crash protection. And I don't think we've really seen anything like that in a while in crypto. So while I agree with Michael, we're seeing depressed action as of right now. I don't think we've seen that true capitulation event that marks the bottom,
So
those
you
vicious days.
so you want to see another UST event occur, because that to me was absolute hell compared to the
That was
FTX
a pretty
situation.
decent. The problem is with that event, it happened at a part of the cycle where we're like nowhere near a bottom in the big macro picture. But, one thing Damiano just said is the word I think he was looking to use, and I think he's absolutely right, for this market to start getting a little bit more excitement and to have some of the big players actually put money into things like the metaverse, which you and I both know, as corny as it is and the biggest flop as it is right now, augmented reality in the metaverse is going to be a huge deal at some point. And, in order for people, big money companies, to start feeling comfortable doing that, they need to have recourse. They need to know if someone scams them out of their money, that they have recourse to go after that person, and that person actually has sufficient assets or is insured by something like the FDIC for them to get some of that money back, even though the FDIC only insures up to a certain point. My point is, there needs, even though this is like the antithesis of crypto, it's the total opposite of what we want a crypto to be. The problem with this crypto space, and what I told you a year ago, Abby, I think it was, is that you have the smartest sociopathic sharks in this place right now, or at least were, because they knew they can come into this place, steal anybody's money, and get away with it. And until that aspect is removed, which like I said, it goes against the original tenets of crypto, but it's human nature when you have something like this, for criminals to come in, and that's just unfortunate. So there needs for people to come in and say, hey, I feel comfortable putting $10 million here, or whatever the case is. They need to know that if someone does wrongdoing, they're going to ruin their life, and that they're going to have the potential to recoup some of that money. I think that's a very, very big factor.
So, how do you guys think that capitulation event is going to occur in crypto to end it off? And I can kind of give you guys some data points, right? Anytime the Fed reaches a Fed funds rate of a full 100 basis point, like 1%, 2%, 3%, 4%, there's always a major event that has happened this year so far in crypto, right? I may be off by 25 basis points, but you guys know you guys know like what I'm trying to say. When the Fed raised to almost 1%, the UST crash happened. And then when they reached 2%, you had Celsius and Voyager occur. And then when we reached 3%, you had like more of the offshore exchanges start to go under. You had things like HODLNOT, Who.com, I can't remember. I can't remember like the names of the other ones, but they're sort of like the cryptopias of this cycle, like lesser known exchanges. And then when we reached 4%, you
Cryptopia
had
was awesome, by the way, bro. Cryptopia was
yeah,
the greatest exchange
yeah,
ever.
yeah. And then when we reached 4%, right, we had FTX, right? So at 1%, you had the DeFi infrastructure completely shit the bed. At 2%, you had the leverage like hedge funds and the fintech apps go under. And then at 3%, you had the lesser known, like smaller exchanges, right? And the smaller versions of Celsius and all that stuff that were done in other countries, as well as a few mining companies as well, start to go under, right? And then at 4%, you start having some of the big names fall, like FTX, right? And then more recently, I think the mining company is called like Computer Scientific, something like that, something scientific. And I believe they were one of the biggest like mining companies here in America, and they filed for Chapter 11. So when the Fed raises fully to 5%, right, in Q1 of next year, how is that going to look in the crypto market? What do you guys think it's going to be? Do you simply think that miners are truly just going to say screw it, I'm selling it all, and we go to 12K, or do you think I don't know, maybe Coinbase, right? Maybe Brian Armstrong steps down as CEO and someone from the Fed steps in, right? Like if you take a look at the quote unquote new CEO of FTX, who's being appointed to in the case and all that stuff, he has that that stern mafia guy look, kind of like a raspy voice, kind of like from Wall Street, the guy with the raspy voice, kind of chunky, real serious, uh, things like that, right? Do you think it's going to be something fundamental, or just go ahead? I'm just
Listen, at the end of the day, bro, no matter what is going on, there's two things that drive these, equity prices, asset prices. There's innovation and there's cash. And innovation, I believe, is going to pick up tremendously over the next, the next half of the decade. I think we're going to see more innovation in the next 5 to 10 years than we've seen over the last 20, 30, perhaps even longer. But as far as the cash goes, the money flow, the animal spirits, I don't know when that's going to come back in. And then as far as what you were asking, I don't know if interest rates had so much to do. Maybe like from a sideways angle, interest rates had to do with what, these exchange going under and all that stuff, maybe from coming sideways, but I don't think it directly. I just think, the crypto market overall started falling. These people weren't making as much money as they weren't at trading profits. They weren't able to cover up the fraud, so to say, and they couldn't keep the Ponzi going with the new money coming in. Maybe the interest rates did do that. I think more in crypto's case, there was just so much fraud that, once the tide came in, there was no hiding it. And I don't know if we're out of that spot yet, but, I like to keep things simple. And, right now, money is coming out of the system, and that's going to continue for a while. And there's going to come a point, this sounds oversimplified, but I really don't think it is. There's going to come a point where enough money comes out that it stresses the system tremendously, and they have to reverse course. I believe and that means both the stock market and the crypto market come down, and perhaps substantially. Now, I know there's another argument, guys like Hermes, who I agree with, by the way. I just think we just disagree on timing. There is that scenario where the market just goes up because cash is worthless, and assets just go on this run because no one wants to hold cash because it's worthless. That would be a very short-lived bubble that would have horrible ramifications like very shortly after. So that's not something you want to see, in my opinion. What you do want to see is Binance possibly looking at it like it's going out of business. Coinbase, you want to see like an event that strikes the fear of God into the participants, into the Fed. And, if the worst case scenario for us investors, in my opinion, well, maybe not if you're fully invested, but the worst case scenario for people who are sitting in cash, so to say, would be for what we have going on right now to continue. Like for someone who's cash heavy, you want to see this thing crash. You want to see it, you want to see some type of high volatility cascading event that has data in the economy backing, which we're starting to see trickle in. And, things are so bad that they have to start infusing the system with money again. I mean, that's the only way I see that combined with potential innovation is the only way I see a long-term bottom forming right now. There's some people out there saying we might see a lost decade. I can't discount that completely. But the only reason why I don't believe that's going to happen is not really a bullish reason. It's actually a bearish reason, because I believe that the Fed has no choice but to eventually put money back into the system. And the next bubble might be the biggest bubble, perhaps the last, but the next bubble might be the biggest bubble of all. And I think Damiano kind of has the same viewpoint with me on that. And so it's not necessarily like, did high interest rates cause all the fraud in this place? I don't think it was necessarily interest rates. I just think that as a factor of interest rates, calming down the activity in the crypto market, these guys couldn't keep up with their fraud, and it finally caught up to them. So you want to see all that clear out. And you want actual, like, real players who are building real things for the economy of the future, which crypto is doing. And you want to be able to focus on those things without someone rugging your $10 million account overnight. That's what you want to be able to worry about.
I agree completely, by the way, Michael. Just to add, I guess, a little bit to that, since I know we're near time. I think I'm waiting personally for at least one more, but I feel likely two more Silvergate players to go bust. And I know that the public sector, the government, they're just waiting right now. They're literally on the sidelines, waiting for that next event, because with each of these events we see a broader public push. We see a grander message of just, we need more regulation, we need this, and that will sort of shift the narrative. The bullish narrative I was speaking on before. I do agree with Michael 100% on everything he said about having to flood the system one more time. The creation of a larger bubble. Personally, just to talk, on the metaverse quickly, I see the metaverse becoming big, but I don't quite think our level of automation is there. Maybe another 2 to 3 years before really we're at a level of AI and automation enough that would push people more into the metaverse. I still see some resistance. So while I am bullish on it longer term, I still think you got a couple of years. But at these prices, I would still always say, when something's down 70 plus %, there's no better time to start accumulating. That being said, 1 to 2 more Silvergate players going bust, public push for regulation, which will lead into another level of mass adoption. And then really, just as Michael said, we need to see that last influx of cash into the system, and some key reversals that will set the new bull market, and what I also think will be one of the largest bubbles, if not the largest bubble, of the last 100 years. So I agree.
Damiano, one data point that I've been looking at is
the inception of the NASDAQ and also the inception of BTC, right? So the NASDAQ, that index was formed at around 1973, 1974, right? BTC, late 2008, right? Early 2009, if you want to account for when mining went live, all that stuff. So if we compare the two, right, as far as age is concerned from inception and where we are today, that would essentially put the crypto market right around 1987, right? So, moving forward for the next real cycle, do you think crypto is gonna go for that .com evaluation of 10 trillion? Because just so people can know how strong the .com cycle was, if you take into account money supply, right? If you take into account money supply for and inflation, all that stuff, the bubble that we just had, right, with the Nasdaq, I think from the .com bubble up until the Nasdaq top this time last year, I believe we barely did like a 3x, like maybe a little over 3x, like 3.5x relative to that. So essentially all we did was a double top. That's all we did. A double
Yeah.
top. And we take into account inflation, all those fancy metrics, inflation, money supply, all that stuff. All we did, right, from the bottom of the Nasdaq bubble in late 2002, early 2003, all we did over the course of 19 years was a double top. That is astounding. So, like, are we talking NASDAQ approaching something like 40K? Are we talking BTC at 200K? Because for me, a true macro cycle, is not 4 years. Macro is like a decade plus. That's why it's called macro. So when we're talking macro, um, what's the time frame that you're giving? Because crypto essentially had about 3 cycles across this latest macro bull market, which lasted, what was it, 12 and a half years?
Yeah.
Well, crypto has never had a cycle backed by actual fundamentals. Now, if it ever did, then you got to remember Apple is a $1 trillion company in itself. What's the crypto market cap right now? So, like, Klaus Schwab, who I don't like very much, he actually has a great book that I suggest everybody read. It's a really good book, and it's pretty simple to read. It's not very technical, and it's called The Fourth Industrial Revolution. And it really kind of explains, even if you hate the guy, it explains really, really well where we're going technology wise, and the difference between the revolution that we have coming ahead and the one that we just kind of came out of, the digital revolution, is this one is going to be synergistic. Everything's going to be working with each other, and it's really interesting. And he had something to say about crypto, and he has a very interesting timeline. He believes crypto is going to be at least 10% of the GDP by 2025. I actually think he's a little early on that, but maybe a little later to the second half of the decade. But let's just say crypto actually has a market cycle built on actual fundamentals besides NFTs and what was the other thing that drove this market? I mean, I believe it was, if you take NFTs out of the picture, what really drove this particular bull market? I really don't see many things. So like if we start having real assets move on to these platforms, whatever you want to call them. I'm not too well versed in crypto terminology, but let's just say all stocks move on to the blockchain, all real estate and deeds move on to the blockchain, everything moves on to the blockchain, which I believe will happen in the next 10, 15 years. Then you got to ask yourself, where can we go? I mean, that's an interesting concept. I mean, we could potentially see the crypto market cap, potentially being 5, 10, 20 trillion dollars. I don't know. But the point is, when it actually has real fundamentals backing it, where does it take us? And we're not there yet, but I believe we're going to go there. And I believe it's going to happen it's going to start to happen over the next 3 to 5 years.
I also, Wabi, just to answer your question from before, I do see us exceeding a 10 trillion market cap on the top, before the next top of the next cycle. Yes, I do see us hitting that. I actually see us going to 12 to 13 plus, just over that, before we see that depression level event I was talking about.
I agree with you on that, Damiano. I think, as far as like macro is concerned, I think this is like sort of like when the Nasdaq bubble popped, we had a value run. Like stocks ran, but Nasdaq didn't really achieve that all time high. Like we bottomed in late 2002 and we peaked in 2007, right? And I believe like the S&P did a double top, right? So do you think we're going to repeat that sort of same price action, or do you think that equities are going to roar on to hit like what these melt up people are talking about 7K, 8K S&P, but not really, next year, but more like 2026, 2027. What's your take on that? It's not much of an opportunity in my life where I get to speak to people that are well versed in the equity markets on this show, by the way. So I'd really like to get your thoughts on that. Is this like something over the next 4 years, right? Or is this something that's more long term for this quote unquote like mega cycle or super cycle as people call it?
I say either way, whether it's 4 or 10, I do think when we do see that depression level event that I was talking about, I think we're going to have two things happen. The first is we will have a very sharp recovery. It won't be long lasting, but it will be enough to have some life changing opportunities. And then once we sort of have that double bottom, that retest of that low, there's a lot of gaps. And I know I've said this. I think I've been saying this since 2016. Michael can attest to this from my old account. I have said all gaps, both up and down, will fill, and I have said this many times. So if you take the craziest charts, I'll always say the two exceptions are companies that go through a reverse split every single year. I wouldn't take that too seriously because those gaps can go up into the millions, and those companies will likely not be here in 5 years. And the other one, notwithstanding, is of course companies who are likely to go bankrupt, who might not be on the market even 2 or 3 years from now. So, notwithstanding companies doing reverse splits and bankruptcies, I see every major company that can withstand the next 5 to 10 years will fill all gaps up and down, and so that goes in line with our. I've seen SPX 10,000 calls, and I've seen some weird things on the tape. I've seen $1,000 on the S&P 500 tape, and I've seen $60 on the tape. And I will say both will hit. As crazy as that sounds.
You're talking about SPY, right?
I'm talking about spot. Yes, in,
Yeah.
in SPX terms, it would be, I think, what 610K, something like that.
Yes.
Yeah.
Damian, a quick question. I think we kind of like, so I know you're still looking for your scenario, which we make a low sometime maybe this year and next year in like the twos, and then we potentially go to 10K on just a crazy hyperinflationary run. Is that in line with what you're thinking, basically?
Yeah, it is. Though I do wanted to address. Wabi had mentioned a double top, and I actually think we will have a small period of resistance where we will hit that 477 to 480 ish, come down significantly, maybe like 10 to 20% max, and then really start our drive up into that hyperinflationary event. Yes.
So essentially like the 70s, like the late 70s, where we would hit multiple resistances at the top, but instead of breaking down like we did in the early 80s, you're expecting like sort of like a 1990 sort of thing where we hit resistance and then we just blow right through it and then hit that inevitable like euphoria. Like people really underestimate how crazy the dot-com bubble was. Like if you
It was
thought that
wild.
like if you thought that this tech bubble was crazy, then my goodness, man, my goodness, you could have thrown a dart and made 20, 30, 40 times your money back in the 90s when it came
Oh, it
when
was
it came to
crazy,
these
bro. I
tech
saw the
stocks.
tail end of it. And it was just absolutely insane, bro. Like I was like, Like I literally put like $300 into a penny stock. I was playing penny stocks with my Russian pit boss, this old guy. I forgot his name. Oh, Anthony. He was great, bro. This guy was the man. Anyway, he was just a crazy Russian guy. We used to play penny stocks together. I put like $400 in this penny stock, bro. And like 2 weeks later, it was worth like 8 grand. Like this was happening every day, and it was the craziest thing you'll ever seen. But back on topic though, yeah, we haven't had like that type of run, and even though this last bull market we got out of was kind of crazy, it wasn't like 1999. But Damien, I was going to go back to one thing you're talking about. I think I agree with you kind of. I just want to see if we're on the same page with something. So I just think the only place where we disagree is the you're expecting a dump, a huge run up, and then right back down really quickly. I just actually think the run up might last a little longer. And I also believe during that time frame, we're going to see a consolidation of a lot of, a lot of companies. Depending, this is a lot of political stuff. We have to see how a lot of political things play out before I continue to say this is going to happen. But I believe there's going to be a massive consolidation of companies. I think we spoke about this. I just don't think it's going to end as quick as you think it's going to. But I do think the end result is going to be, full CBDC dollar, new system, potentially, like I said, depending on the politics, Agenda 2030 type of scenario. So I guess the only thing we differ on is like eventually the Fed's going to have to start printing again. That printing may cause hyperinflation at that point, especially since the dollar is not going to be potentially the reserve currency it is, 2-3 years from now. So we're not going to be able to print willy-nilly. Well, we can, but it may not. It may not keep its, even though it really didn't keep its value. It may not have the, that solid floor under from being the petrodollar. So you're expecting a crash, a huge run up, and then a crash, if I'm not mistaken. I'm expecting almost kind of like the same thing, except I think it's going to last a little longer potentially.
No, so I actually agree mostly. When I used to say this a lot, I say the market will never be the same again after the 2025-2026 event.
Yep.
But if we look at the standard, I'm not going to go too much into this, but the gone cycles, it would agree with you that after that cycle, one last, I would say, not as fast, but a slower double top, and that's what I meant by we'll see the depression level event, and then we'll see a fake run up, a retest of the bottom, and then I think we'll see a slow 5 to 6 year retouch of that double top, and then into the 2032, 2033, right along where we would see the next big crash event. That would really
that's supposed to be that area on the chart is actually very important. I've seen a few people mention that area.
Yeah, that would really be like the nail in the coffin for the TradFi markets and full on Agenda 2030 level adoption. And that's, as you said, a consolidation of companies. Couldn't have said it better myself. I expect not even 10% of the current companies on all markets to be there by that time, 10 years from now.
And it's funny, if you guys watch science fiction, I know this has nothing to do with the markets, but if you remember how a lot of these science fiction shows describe the future, the corporations own everything. And there's only like 15, 20 major corporations that run absolutely everything. That's something I think that we may possibly see in the future. But someone has their hand up. So, Wabi, if you want to take people with questions, that's on you.
Yeah, guys. Yeah, we've reached that 1 hour mark. So if anyone in the audience wants to come up and give a statement or ask any questions, feel free to go ahead and click that request button. We have New Bro with his hand up. What's going on, bro? Good to have you here. What's going on, my man?
Hey, thanks for having me. Michael, I had a question for you because you mentioned the book by Klaus Schwab, The Fourth Industrial Revolution. And I really appreciate everything that y'all are bringing in on this discussion. I really agree with a lot of it. And you really have to kind of consider a lot of the long-term time frames like 2026 and like where we think the next market is going to top, and really kind of put out like 5 and 10 year plans. I was curious on your take on smart contracts as a value proposition and oracles behind that. I know Wabi and others that have listened to me go on for a little while know that I'm biased towards Chainlink. So I'm curious if you read that book in relation and like in any sense of consideration towards Chainlink or any sense of oracles and smart contracts.
Yeah. I know that Chainlink is one of the and I hate the WEF. I'm not with them on anything they want to do, but I do agree with his, his vision of where technology is going. Now, I know there are potentially, so I'm not really a tech guy with this stuff, so it's not necessarily the question to be asking me. But if you're asking me if the tech was foolproof and it worked and it had little mistakes and it functioned properly, is that where we're going? Absolutely. I mean, I don't think there's any question. The economy is going digital. Everything is going to be digital. Everything is going to be tracked. And there really is no stopping this unless people really say, hey, no, we don't like this and we're not doing it. But eventually, companies like Link are going to be needed to do this. They want to be able to track everything at every point in time. And I believe Link helps them do that. Am I right or wrong?
Yeah, no, and that's what I was going to say is I'm exactly with you in the sense of like, I really don't like the dystopian future and the way that it seems like things are going to go. I completely agree with a lot of things that y'all have said in that topic and that vein of discussion, but I completely agree and think that as much as it could be considered investing in the system that will continue to enslave us, I think that Chainlink in the long run, regardless of any sort of moral obligations to your personal investments, I think it's something that will absolutely accrue value just through
Oh, you're
abstraction.
absolutely right. And there's no denying that. And listen, there's no stopping innovation. I put out a tweet like maybe 2-3 weeks ago. I don't know, maybe a month ago. And people always want to fight, and I agree with them. Why transhumanism and stuff like that looks like it sucks, but you're not going to stop it. It's just where we're going. And you have to learn to adapt to it. And if you want to live, a nice private life where you don't want to put a chip in your brain, you're going to have to figure that out. But that is where we're going. Eventually, when they perfect this technology, you're going to be at a huge deficiency to people who have it. When they perfect it, I would definitely not be one of the first people who tested that out. I don't know if I'll ever do it because I have different values that I abide by, but I rather do things in different ways. But my point is that's where we're headed. There's no point in trying to fight it, because we don't have an enlightened population that's going to say, hey, enough. We're headed to a digital future. We're headed to a tech-centric future. And the only thing that's going to stop that is if our electric grid was blown up across the planet and we went back to the Stone Ages. That's the only way we're stopping this. So,
Exactly.
Yeah.
I completely agree. Pandora's box has been opened. As much as a lot of people are stuck in an echo chamber of, Bitcoin fixes this, it's also really opened up a technology that has its pros and its cons. So yeah, I really appreciate that y'all bring that up.
And if we're still here 1,000 years from now, or even not even 1,000 years, if we're still here 100 years from now, things are going to be all tech. We're going to be half human, half hybrid technology, and that's just the way it's going to be. I'm not for it, but that's where we're going.
In a way, we kind of are already, right? Like a phone is essentially an extension of ourselves, right? And the way we communicate, right, a lot of that has to do with money, right? If we transact in crypto, we're essentially leaving the old way behind of a physical product, right? We're no longer bartering with gold and silver, or even like dollar bills. It's all part of like some sort of block of information, right? Whether that's the blockchain or whether that's fintech apps like Cash App and Venmo, that's an extension of ourselves, right? Like if I'm like, all right, Michael, I want you to write an article for me, right? I give you what I think is valuable, and that's like, a few a few pieces of code on something called the blockchain, right? Essentially, like that's an extension of myself and how I value your time, right? Or if I want to like search up um information on a certain topic, I go on Google on my phone, an extension of myself. Where we're limiting a lot of our creativity to handheld devices, and it's just a part of everyday life now. right?
Yeah, and eventually it's going to get smaller and smaller and smaller and smaller. Eventually it's going to be a part of you. Well, that's your personal choice whether you want to do that. But eventually the stuff, your cell phone's going to be in your eyeball. That's just the way it's going to be.
Oh
You know,
man.
20 years ago, my friend gave me this book, and you guys should read it. Like, listen, I read it 20 years ago, so what might have seemed really cool to me when I was 21 years old might be corny now, but it's called The Age of Spiritual Machines, and it's written by Ray Kurzweil, which is the head of innovation at Google. And he's talking about when machines and when, robots, whatever you want to call it, when they're going to become conscious. And he had some really on-point predictions in there. And by 2100, um, the average processing speed, even though some people say this is slowed down now and it's not going according to Moore's law, but according to him, by 2100, the average processing speed of a computer is going to be 1 trillion human brains. Think about that for 1 second. So, I mean, if that is the case, then, 100 years from now, by 2100, we're going to be living in a completely different planet. And I just think the pace of innovation, we just at the end of this year, we're seeing this GPT thing come
Yeah,
out. I'm not
I was
really
gonna
too
mention
impressed with
that.
it. Yeah, I'm not really too impressed with it, but it's just showing you now that AI is on the scene now. It's only going to get better. It's only going to get more, advanced and all that good stuff. So, that's just where we're headed.
There's actually like one AI prototype that's out right now, and I believe there's gonna be, like, of course, there's always gonna be Ponzi schemes in all markets, but I believe this project is trying to come into crypto. But essentially, it's an AI that can create games and can create pitch decks with a snap of a finger. If you give a description of a story, it will make a CGI movie. If you give a description of a video game, of course you have to be detailed, right? You can't just put something like you would put in a Google search engine. But essentially, it's having innovation in a snap of your finger. And it also includes smart contracts. And you can say that that's innovation, sure, but it's also kind of scary, right? You're essentially creating the Amazon of creativity, right? So on Amazon, you click a few buttons and you have like a video game within 8 hours, right? Well, instead of that, right? Instead of a product for consumption, you order a product for consumers, if that makes sense. Whether that's a movie or a game or a pitch deck for investors. Essentially, you'll have it all at your fingertips when it comes to creativity. And how that's going to work in blockchain and crypto remains to be seen.
Yeah, I
So
see. I see AI and crypto as like the left and right arm of the new system we're headed into. I don't know what else is going to contribute to it, but I believe they're going to be working with each other somehow in some form, and I believe they're going to be major aspects of it. Like I said, the big thing in crypto right now is whether. I think it's not a discussion yet. It will be. It's centralization versus decentralization. I think that's going to be a huge macro, not even just in crypto, just macro in general. I think you're going to see states wanting to succeed. I think you're going to see people wanting to be left alone. They don't want to be in these big centralized systems. But that's what we're moving towards. And I think it's going to be there's going to be friction between it, though. I don't think it's going to be like, we snap our fingers and we're just this one world entity that's working like a well-oiled machine. There's going to be friction to it in some places. And I think that's going to happen on a micro level within crypto as well. And I just think that we're on the cusp of a lot of innovation. Whether that reflects in market pricing or not remains to be seen. At some point it will. But I believe we're on the cusp of major innovation. We kind of stagnated for the last, if you think about it, since the iPhone came out. What really had crypto, you could say, but crypto is kind of an old technology when you think about it. So, like, really, we haven't had much innovation since 2010, 2011. I mean, unless you guys can name something I'm missing, some of the biggest, like, all we had is like food delivery apps. This is what these VCs who think they're the kings of the world are, and they're very, they're so smart. This is what they were putting millions and millions of dollars into, delivery apps, so we could all have junk food quicker. Or Beyond Meat burgers or something like that's not innovation, but I do believe we're actually going to see real innovation in the next 5, 10 years. That's going to blow our minds.
I think to touch on that, Michael, I think the future innovation is going to come from evolving the technologies that weren't previously at a level. So as you say, like, since 2010, we've seen the rise of alternative energy system. We've seen solar rise in efficiency a ton. We've seen 3D printing evolve. There's talks of like 4D and even different kinds of like biological printing processes now. So I think the next 10 years is going to really just be figuring out sort of what evolutions of current technologies are going to be useful, what's going to be worth spending now these billions and trillions on, and then filtering out what's not really going to be needed. Because I feel like as we head to a more centralized society, we're also going to be centralizing the services and technologies that we need. I actually don't see this sort of the abundance that that the systems have allowed for in the last 50 to 100 years. These having so much choice. I actually feel like as we go towards this technocratic utopia here, we're actually slowly losing our power of choice. And we're really, even though it seems like all these things are out there and it seems like, oh, we have more than we ever had, it's all filtered really. And if you actually take a step back and look at what's being offered, you can see very clearly that we're narrowing our path here. We're losing that abundance and freedom to innovate, as you say.
Yeah, it's like the internet. Like when you used to browse the internet in the early 2000s, there was hundreds and hundreds and hundreds of places to go to get awesome, awesome information and whatever little niche you wanted to get into. You would find these wonderful little message boards with top tier information. And I guess it's still out there, but everything kind of like, you look at culture now, everything kind of mishmash into one thing. It's like culture is kind of like uniform across the globe now, and that's because of the internet. So like what that does is that lessens creativity. You don't see, music is kind of declining, cinema is kind of declining because the experiences aren't so novel. It's like everybody's doing the same damn thing, talking the same damn way, So it's like, it's a little weird in that regard. Maybe that's just me. I mean, maybe that's not really the case. But, I think what you said about 3D printing I think 3D printing is going to be huge. And like I said, I think crypto infrastructure is going to be huge. Once we figure out who's going to be the infrastructure behind moving everything onto the blockchain and all that stuff, which I believe is going to happen, and, so do people in high places, I think that's going to be huge. And then when the metaverse grows out, when the technology actually gets to the point where the metaverse makes sense and augmented reality makes sense, that's another huge opportunity for crypto to store the digital items and things of that nature. So there's a ton of innovation ahead and there's a ton of opportunities. You just got to find the winners. It's like when this bear market is over in crypto, you have to really do your homework and find out who's going to be leading the charge into the new world that we're headed into. And I think if you could do that and, find out who's connected with the right people, and I think if you could do that, you're going to do very well.
Perfect, man. I want to thank you guys for coming up on the space. It's been an awesome discussion. Thank you so much, Michael, for taking the time out of your day. Thank you so much,
No problem,
David,
bro.
for coming on here and introducing yourself to the community. For all you guys here on the space, if you enjoyed this sort of content, feel free to follow the Because Bitcoin page and turn on bell notifications so that you can get alerted when these spaces occur. And if you came in late in the conversation or you were shifting in and out, you can find a replay on our YouTube channel. You can go ahead and visit the Because Bitcoin website and you'll find a link to our YouTube there. But outside of that, the replay will be posted about 5 to 10 minutes after the space has concluded. And yeah, thank you guys so much. Another great episode of Crypto World Radio. I want to thank you all for participating. It means a lot that you guys have shown love and support and always give me some pretty solid feedback. And for tomorrow's guest, we'll have Crypto Shadow, the founder of Tier 7, and he's also creating the Metaverse Monkeys, which is a very, 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 very unique addition in the NFT space. And believe me when I say it's not just a PFP to milk money out. But I'll let him explain that tomorrow, same time, 7 p.m. Eastern time. Pleasure having these two Chads. Make sure to give them a follow. And if you guys want to interact with me more and other members of the Because Bitcoin community, feel free to go on our Discord. The link is up on the Nest. officially crossed 1,000 members today, so that's pretty cool. It's always nice to make friends in this quiet period of the market, because I truly believe, like I've been saying over the last few episodes, is that the network that you create during bear markets um, will be indicative of how you finish the next bull market. And I think if you're a crypto native, I think it's very wise of you to connect yourself with individuals who partake in the equity markets and also have experience in the equity markets as well as the crypto market. That's sort of like that's sort of like a double whammy right there, right? But on a good note. So yeah, Michael, Damiano, I hope you guys have had a good time, man. And if you
Definitely,
ever,
bro. I
if,
appreciate it, and
100%.
thank you. And because Bitcoin team, I appreciate it.
Thank you for
no,
having me, guys. Really appreciate it. Look
no
forward to
doubt,
the
man.
next one. It was really fun.
No doubt, man. The YouTube link will be tweeted out a few minutes after the space. So if you guys want to check that out, I'll DM it. I'll DM it to you both. So yeah, guys, I want to thank you all again on behalf of myself and Because Bitcoin. We appreciate you. Thank you guys so much. See you guys tomorrow at 7 p.m. Eastern time. Take care, and God bless you.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000. You know, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.